Hi, this is Saev Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexBSummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexBSummit.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on euro currency. Here it seems that our doubts and suspicions are not in vain. So as we discussed in our weekly report, the fact that market has dropped significantly lower on Friday and actually raising the big engulfing pattern, forming the double repo by failure pattern, it was keeping us in tension. And as we said in the weekly report, we need to get more bullish signs before we decide to take the long position. And on the price behavior that we see currently, especially in Monday opening, as you can see, it was a significant gap down. It just confirms our suggestion. So it's really no reasons to be happy yet on euro currency. The only reason that we have here currently is the action on the dollar index. So as we said, take a look at on the dollar index, we have the spike up here and forming the bearish grabber last week. This also might be another grabber if market will stay here and start dropping. At the same time, on the euro currency, we see the bearish performance. And as you know, euro currency is actually the 40% of the dollar index approximately. So definitely here stands some contradiction. So it might happen, since this is a weekly chart, we have on a daily chart on the euro currency, maybe it might be some fluctuations and market will hit some predefined targets on euro currency, and then dollar starts falling or grabbers will be raised, something like that. But this contradiction that we have between the dollar and the euro currency could last for too long. There's probably some resolving on this riddle should happen relatively soon. At the same time, performance of the gold market and the performance of the interest rates, you could see mostly stands in favor of the dollar downside action. So you can see here is the treasury bonds was not able to proceed higher to the next target, 216 area, and start dropping. So here's actually is going on what we discussed in our weekly report. We said currently big concerns stand that Fed needs to rise rate aggressively by the few reasons. So because in two words speaking, and mostly some fears of the stagflation is coming on the markets, because inflation pressure stands across the board in the hydrocarbons, inside on other goods actually, inside the United States as well. Well, in this current environment, as this crisis and the geopolitical tensions that stands right now in Europe, which might be, hold the overall growth of the economy. And currently it's widely anticipated that Fed will change rate only for 25 points in March. This is definitely dovish decision for the all markets, and that's already mostly have been priced in the 0.5% change. And for inflation that we have currently in the United States, this definitely will be very small change. So it's definitely will be not supportive for United States dollar. That's the reasons. It's of course also the geopolitical risks and so on. That just keeps actual demand for safe haven assets. So with this short-term performance that we have in place on the euro currency, I think that we could consider the 4-hour time frame chart. Actually, on the daily, we do not see something really new. So market just dropped to the oversold on the daily and shows the retracement. But on the 4-hour time frame chart, I would watching for this pattern. So in fact, market has not completed even first bullish condition that we discussed. So we said to start thinking about taking a long position, market should at least break above the 113, which will be important resistance level. Here is confluence and previous lows. And next step is to reaching of the 114 area. In this case, we could consider maybe some kind of maybe reverse head and shoulders pattern or something of that sort. So at least if the hint on the possible bullish reversion signs appears. But when you have the war in Europe, actually, it's very difficult to expect. So that's why in the current circumstances, and based on the consolidation that starts forming here, I would wait for and actually watching for possible drop to the XOP. Because here the sell-off was relatively strong, market was not able to proceed higher, showing the downside breakout here, forming the triangle consolidation. There's also potential bearish continuation pattern, and market was not able to pass through the confluence. So this is just shows that bearish signs dominating currently over the potential bullish signs. And from that standpoint, personally, I do not want to buy euro in this area right now. So it seems more probable that we could get some attempt to go to the XOP first. What will happen on dollar index we will see, but well, anyway, if you even do not want and do not consider any bearish position and you would like to buy euro, I suppose that it might make sense to wait a bit more for more clarity. Maybe here we'll get some bullish signs. So that's actually what we have currently on euro. On the hourly chart, nothing really interesting. Here is the gap standing, and while it will be opening, well, this also will work like the resistance for the euro. So also the bullish sign might be if market will close the gap and start moving above it. So that will be at least something, but currently it's nothing to talk about yet. Also, guys, we can see interesting performance on the Bitcoin. Just sorry me for this off topic, but I just have to show you that actually those of you who are watching for our analysis on the Bitcoin, we have prepared the new fundamental report on Monday. We'll also, as usual, made the technical analysis, and we were considering this pattern. We said if you would like to buy, you theoretically could try to do this and take a look. Right on Monday open, you could see what we've got. So actually, it's completion 43 target immediately. My suspicion is that this is actually money of the Russian oligarchs. It's just because Putin has signed the law that is forbid the opening accounts abroad starting March 1st, so starting from today's session. And they probably could try to put somewhere the international currency, foreign currency. And it's most probable and obvious way because other financial markets currently closed under the sanctions. They can't invest in United States bonds, they can't invest in the stocks. And the cryptocurrency is actually the only open source where they could invest actually. That's at least my suggestion. So, because in other reasons for so strong rally in the Bitcoin, well, I just do not see. So that's really interesting that you can't see actually every day. So going on the Bitcoin market. So that being said, on euro currency, I think that if you do not want to sell, that's just fine. But at least wait for more bullish signs, and closing the gap, it might be the first sign. So let's keep watching what we will get on the euro currency.